Okay, welcome everybody to this evening's ACY Securities webinar, live forex market review. Before we get into it, if you can read through the disclaimer, that would be great. If you're on our YouTube live stream, I cannot see the chat, so I can't see any questions that you're bringing in. And for those in the webinar room, you can ask me questions in the webinar chat or the question and answer box, feel free. So as you're just starting to come into the room, if you can read through the disclaimer. All right, we might move along. So if you don't know me, my name is Duncan Cooper. I'm a senior market strategist and trading mentor here at ACY Securities. I'm a full-time trader. Trading the forex market now for more than 15 years, mentoring clients for more than 10. If you want to contact me, my email is there, duncan.cooper@acy.com. Through the week, you can connect with my analysis at our website, acy.com. Go to the market news tab, or our YouTube channel, ACY Securities Australia. And also you can connect with me on my Twitter and LinkedIn there. So you'll be able to get my content in any of those means. And through the week, if you want to connect in our Telegram channel as well, then contact Nathan to get access. His email is on screen there. And if you want to get access to my chart layouts and templates that you'll see tonight, just contact Nathan. He will help you out with that. I'll put his details in the chat. So if you have any questions, you might need help with a demo account, or if you've got questions about a live account, just contact Nathan. So his details are just going in the chat. All right, let's get into it. So first up, let's just have a quick look at the news front, what's coming out on the news. And we've already had the Swiss interest rate decision. Came in as expected, 25 basis point rise there. The big one for tonight is for the UK here at 9 p.m. We've got the official bank rate votes, monetary policy summary, official bank rate expecting 25 basis point rise now. Yesterday, the inflation figures for the UK were a lot higher than expected. So expecting 25 basis point rise there, but it'd be interesting to see what happens. They may surprise with a bigger one, or at least however they talk, maybe more hawkish. All right. Midnight, we'll have a further testifying from Fed Chair Powell. Whatever he testified last night and whatever he discussed last night was definitely US dollar negative. Pairs to the US dollar definitely moved up. All right, and then tomorrow we do have all the flash manufacturing services data coming out from Euro, the UK, and the US. All right, so that's what's coming up. But the big one at the moment, if you're in a pound cross trade, you need to have that risk-free or managed. Okay, because there's the interest rate decision coming out. Right, let's get to the charts. We'll have a look at the dollar index first of all. Now, I have been monitoring the range of last month. This is this colored area, and I was hoping we would hold at the 62 level, but now that we've moved below the 62 level and day support, I don't know if the move that we saw last month is going to hold for long term. All right, so the structure there on the day chart is down. Unless we're going to hold here and create some little form of double bottom and then move above this top here, then we could well see a further move down to support and then testing support. All right, so we're seeing a little US dollar weakness continuing, another lower top coming in. S&P 500, that's been pulling back. And just want to look at the range for last week. My 4-hour chart, I have these lines that tell me where the range is for last week. We're pulling back to 62% of last week's candle. All right, so we might start to get some support there. Ultimately, this is still in an uptrend, higher bottom to a higher top. We're having a pullback. So however you draw your fib from the day chart, I will be drawing it across that range. As I said on Tuesday, the 62% level overlaps with the monthly resistance level that we moved above. So it is holding its trend, although the last 5 days are negative. So it's definitely correcting that very impulsive move above monthly resistance. The question will be, can it hold itself above 143.23 monthly resistance? And that's that high there on the monthly chart, which is that high there on the weekly chart. So the weekly trend is up here, the monthly trend is up, breaking above that top. So if you're trading the index, pullback needs to hold at or above 43.23, wherever that starts to maybe bottom. Okay. Azu, hello to you. All right. Now, some of these pairs are getting quite strong to the US dollar at the moment. The euro dollar doesn't seem to want to pull back. So we might start with the euro dollar. I put this out on Telegram this morning. I was looking for a pullback, and it hasn't cut of some form, but we haven't really had a pullback yet. And Azu, I'll get to the NAS 100 later. Now, the weekly trend here is up on the euro dollar. A further higher bottom coming in, and we have a higher top. The question will be what happens at 110.33, this weekly top, because that's where we failed at last time. We pretty much traded down all month last month, but couldn't continue that move down. Now we have a higher bottom to a higher top. So we could well be, drawing fib tool in, we could well be moving through and towards 112.15, which is a monthly resistance level, and the 127 extension at 112.51. Of course, it will have to be able to this time move clearly above 110.33. So at the moment, a very impulsive day yesterday. I'm just going to get rid of that fib. And we were trapped between support and resistance, and we broke out yesterday, resistance being at 109.42. So I've been looking for, can the market pull back at some point now? 62% level overlaps with, on the 4-hour chart, broken daily resistance now being supported at 109.42. You got 4-hour support at 109.46. So I'm looking at that area there. Now, price might not want to pull back. It's a number of times here testing 110. 110 has been a very heavy going area when we moved down in May. So we may have an intra-week correction from 110 at the moment, and I would be looking for a dip. So I'm looking for a dip down here at 109.42 area if the market can offer a dip. I don't want to be buying, if you're not in, you don't want to be buying at the top of the move for the week and for the month. You want to be buying on a dip. So the most logical place to look for a dip is down here at the 62% level. So if that can be offered and price comes down to this area and holds, that would be great. If it doesn't, I'll just be sitting waiting for an opportunity to arise. This is, for me, just too high up in the move. I did say on Tuesday's price action was here. And I think when I was talking, price was up here, and I said, watch 109.09 down to the figure that had been offering support close to the area, and you can see into Wednesday 109.09, which was day support, held there all day before this impulsive move. So that was really your opportunity to get long this week. 109.00 to 109.09 was your area, but of course we can't go back in time. So looking for the next dip. All right, Euro yen, it's continually moving up. To your daily chart, in fact, to your monthly chart, the next major level, this is a weekly area up here. Go to your weekly chart, you'll find it. Next weekly level is at 158.59. I just want to squash that in. That's a weekly area. If you go to the weekly chart, and there's a monthly area from way back in 96 at 162.42. So really a carry trade is really transfolding on these yen pairs, where central banks on the opposite side to the yen are raising their interest rates. So it's looking, trying to buy a dip if you can. All right, so the next major level to watch for resistance, where we might have a falter at the moment, is 158.59. So the day chart, So the very minor pullback, and it's on its way back up. So look for a dip. We had a very minor downtrend on the 4 hour, which is now turned to up. So I will be monitoring the next pullback on the 4 hour. Drag your fib from low up to the current high. Keep moving it up if it moves up, and look for a 62 or a 79% pullback. All right. Trying to short this at the moment is just madness. It's clearly in an uptrend. You just want to look for a good technical dip. Tomorrow, you know, a good technical dip may be just to these 4 hour highs. These 4 hour highs at 155.32, 155.37. The dips may be very shallow, but I would, you know, in a perfect world, be looking at a 62 level or a 79% level. Okay. Just drop it to the 15. I mean, today, with this being so strong, if you wanted to look, a level intraday to look in terms of pivot points would be the central pivot point. We haven't been able to get down there today, so if price did pull back to the central pivot point, price may well just stop there and turn around and offer you an entry on an intraday setup. But logically, with that 4 hour up move, looking at the 62% level to a 79% dip, if that can occur. You don't want to be going, I've got this fear of missing out, and you're just buying right now at the top of the whole move. Okay, looking for a dip. All right, euro pound. Now, I did say earlier in the week that we're in a very strong support area, and it looks like that support area is governing price action now. So we were below monthly supports, 85.47, and weekly support, 85.65, but clearly it can't exist down there. So it's probably maybe coming up to the last broken level of resistance up here, around about the 87.21 to 18 level. 87.21 is a monthly resistance level that was, sorry, a monthly support level that was. So now looking to be resistance. You got weekly area here as well. I think that's at 87.18. So at the moment, I just want to go to a higher time frame weekly. This isn't a downtrend, but it's in its overextended phase. So, you know, you're now potentially looking for this to move back up to the 62 level. That's 87.38, and that's where your resistance area all comes in up there. So potentially now there's an upward move towards that area. So, you know, of course you could be trading up that way. I would be looking then to the 4 hour chart and assessing the swings. So that's the current move. Keep dragging it up if it keeps moving up, and look for a pullback. 62 level at 85.60 is very close to the weekly level at 85.65. So I'll be looking for a pullback. I'm never chasing the price. I'm always looking for a pullback. So I have to be patient for a pullback. You know, buying a dip in an uptrend, you're not buying the top of the move in an uptrend, okay? You want to buy a dip. All right, let's go to the pound pairs. Of course, we've got the interest rate decision. Today chart. Now this area in here, I put out in Telegram earlier in the week. I said, watch 4 hour support down to weekly supports. There's the weekly top at 126.79. This isn't a clear uptrend. And on the 4 hour chart, that's the weekly top, 126.79, last month's high as well. And there's the 4 hour top. And we just came just below the 62 into the 4 hour level, in between the 4 hour and weekly area here. And it was coming down to fill the imbalance that formed last week. So if you know what an imbalance is, the imbalance started around about there. All right, we didn't actually complete the whole imbalance, but we filled most of it, and support came in between the 4 hour and the weekly support, okay? So I'm anticipating this is moving up now. So let's just drop it down to the 15-minute chart. Of course, when the news comes out from the interest rate decision, we could spike down. So the area still to watch if we get a very exaggerated spike down would be down here at 126.99 to 126.79 if we can get an exaggerated move, but potentially that may well be unlikely. It's already on its way back up. All right, so of course we've got the interest rate decision coming out (9 o'clock), I think I said it was. Let's just double check. 9 o'clock Queensland time. So being in If you can't, if you're not in a trade that's well managed already, you really want to wait to see what happens with price action. As I said, down here at 12700 down to 126.79 would be my zone if we got a very exaggerated dip down. Other than that, if price shoots up, you don't want to be buying at the top of a move, so it becomes very difficult for the pound dollar. What I am noticing over the last 2 trading days, let's squash this in. The 128 level at the moment is very hard going for the pair, so that's definitely worth watching. I mean, we could trade, there are 2 sides to the market. This could trade up to 128, a little bit above today, and then simply not want to move any higher. So then we could be playing at 128 to further move down as well. So 2 sides. Of course, support's here at 127 at the moment, resistance is at 128. So those are the outer boundaries. High time frame trends are up, so I think we may be well moving further up longer term. So always looking to buy a dip. So yeah, Slav pound's staying within its range. I guess it's waiting to see what comes from the central bank. Whereas, of course, the euro was quite range bound Tuesday into Wednesday, but of course, yesterday when we had the testifying from Powell, and I'm guessing that was up through here. We've clearly gotten support down at or close to 109, and now we're asking the question, what's happening at 110? All right, so those are levels to watch in the pound dollar. It's going to be difficult, until that news comes out and we see which way it goes. Same with the pound yen. Earlier in the day, I was looking down here for a dip. Put that out on Telegram, 80.41. That area is still relevant. I was looking at that with a fib in the area, and the way I came up with that level was you go to your monthly chart, which is in a clear uptrend, and we've moved above this area. And for the last 2 days, we've been trying to dip below it, but the buyers keep pushing back above that level. So that's becoming an area of support. All right, and the most immediate level of resistance is the one we just formed at 182.12. So you can see here on the 4-hour chart, this 180.41 level moved below, came back above. Yesterday, we came down and rejected heavily on the 4-hour candle. So clearly the market's watching that area. So you may well still see the opportunity for price action to dip down here. So I had a fib drawn from this morning, this low to that high, and the 62 overlaps. Now that we've moved up, just adjust your fib. It's in between the 62 and the 79, but I mean the support and the pivot there, that's still the level to watch in terms of support. 180.41. It's been support the last 2 days. Now, yes, price has traded below it in the last 2 days, so I wouldn't just be trading the level. I would let price just come down and test it. And then does it want to start to trade back above, and can you see a setup to trade up? Like over here in this area, whilst it traded below, once it started to move back above, there's a trend line break to the upside. All right. So, if price dips below and then you get the same sort of price action scenario, look for support to be holding there. So that's a level to watch there. That's in a clear uptrend, the pound yen. I'm expecting that the UK will be still very hawkish with their still highly inflationary inflation figures. They're going to be still wanting to raise interest rates to stamp that out. So that just increases the potential for the carry trade on the pound yen. Yes, the pound yen is very overextended, but with that carry trade, I think dips will be short-lived at the moment. And we've just been dipping below 180.41. Of course, the last 2 trading days as well, if we know it here, we've been getting support quite clearly at 180. So, watching 180 as well. Depending on what the market does when the news comes out, we could get an aggressive dip. So 2 areas to watch there. All right. At the moment, this is looking very positive. It's just been getting support at central pivot point for most of the trading day. So whether or not we can get down to these areas, but those are lower areas to watch. All right, let's move into Aussie pairs. Now the Aussie, it's getting support at support level. This is where I was looking yesterday, down at 95.73. We just keep getting fractionally short, but it has offered from that area of support. It's weekly support, a nice trend line break move up. All right, and we came back down to revisit. There was a trend line in here, which was quite acute, but another trend line break to the upside. But clearly, another yen pair getting bid at support. So the support I'm talking about to the day chart is this weekly top over here. Let's drop to the weekly chart, this area here. All right. Now, it is overextended, but we're putting in another higher bottom here on weekly supports. You may have missed the opportunity. The best area of the week to get yourself long was close to that 95.73 area. Now, 96.53 is daily resistance. 96.87 is monthly resistance from this high here. There's still a question that we could top out in this area because we're at a very high area, monthly resistance, but we do have this underlying bid at the moment on the yen pair. So there was the opportunity to get long close to 95.73 on 2 days here, or 3 days here. I don't want to be buying into resistance, so you have to be choosy where you're picking your trades. We could stay consolidatory here for a number of days. So I would still watch 95.73. If you're not in, you might find another opportunity to find support there. As I said, the question is, are we going to actually hold up here and see a change in trend on the day chart? So if we do see a change in trend, of course, then there's a downside move. The downside move would be a break below this weekly support. So as we look at, say, the 15-minute chart, this area here, it's acting as support at the moment. So if we do get a break, one of the possibilities would be that we break below a clear break, and then that weekly support then becomes resistance. So that could happen over the next, 2 to 5 days. That area could switch. At the moment, it's acting as support. So if it's acting as support, you just have to treat it as support until proven different. But there is the potential that could switch. I mean, I can see on the 4-hour chart here, there's a bit of maybe, somebody could be looking at this area for a left shoulder if they wanted to, and that ahead, and a right shoulder here. But there's an underlying bid there at the moment still. I think it'd be futile at the moment to try to sell. You'd want to see the 4-hour go like break and then come up back up like so, and then you're selling here. We don't have that at the moment. It's much more the opposite structure. So look at any further dips or close to 95.73 for support at the moment. Even now, back to the 15, we might well start to see that any dips down come to 96. All right, the buyers are starting to shift up. We may well see 96 becoming support over the next trading day or two. But you don't want to be buying into daily resistance at 96.53. So you want to get in long down here so that you break even by the time you're testing 96.53 and the market's going to decide or not to break. You don't want to be trying to buy into it for a potential break, because then it could just not break and then you're wrong. All right, now the Aussie dollar, the very strong area of support that should have been, after we broke above it, 68.18 to 68.05, potentially is now holding as resistance. All right, I'm just going to get rid of that color, but that's could be flipping to resistance. This could actually go either way. It could be holding at resistance to move down. And what I can also see here on the 4-hour chart, this is a range for the week of last week, low to high. And we're at the 79% level, which overlaps with this area of support here. And there's a bit of a inverted head and shoulder pattern forming here, left shoulder, head, right shoulder here. And today's dip down just got support a fraction above that area. So support's coming in there and resistance is coming in up there. You know, the day chart trend is up, and you can see a lot of wicks on the bottom of these candles. This could be forming a bottom here to break back above the area. So I think the bias is to the upside. It's just you don't want to buy into that area of resistance, because if it holds, of course, you're going to be wrong. Being a buyer near these lows, all right, I had that range of last week here, 79 level, but you know, looking at this on a 1 hour chart, you'll see the head and shoulder kind of affair going on. Whether you want to look at yesterday's dip or today's dip, there's your left shoulder head. All right. So we've already done the dip twice, so I wouldn't be looking for another opportunity to buy a dip. If we come back down again, it may well fail. So you have to assume, I think, that the dips have already occurred. So then it becomes difficult to get in, because you should have already gotten in down on the dips. So at the moment, you know, I'm just sitting on my hands waiting to see what happens in this area. This area could offer the opportunity to short, because we just go back to the 4 hour chart. If we come up on the 4 hour chart here to try to trade above 68.05, today we traded at 68.06 and then held. So it is telling you it's resistance at the moment. But if we get a further move up and rejection, then potentially 68.05 to 6800 there is resistance, and we could actually be dealing with, on the day chart, a complete false move above this area. And as I said on Tuesday, this is this year's high to this year's low, and there's a 62% point there. So I can see why it topped out there, 62% point, and there's a weekly high over here. So now the market's asking itself, do we have the buying pressure to further move back above that area? So there's both sides of the market potentially could win out. Are the buyer's going to win or the seller's going to win? So that 68.05 to 68.18 area is the area to watch. And I'll just be watching the 4 hour chart to see if we reject up there once more. You could be watching in that area on the 15-minute chart. If we get back up there, you know, do you see a trend line break and a move back down? Clearly, yesterday we didn't want to get above the figure here. We got above, came back down. I think this is a bit of an erroneous candle on the rollover time, but once more failed at 68.05, back below the figure. So that's the area for the sellers. All right, what happens up there? You know, if we revisit there and we hold, maybe there's a selling opportunity. Maybe the sellers are taking control. Of course, the buyers are taking control down here around about 67.40, but 67.50. All right. All right, getting into the New Zealand yen, coming up to retest last year's high once more. We could be dealing with a breakout here. Breakout or failure. We did move to a higher high here back in time, to the monthly high before, and then fell all the way back down and held the range. Are we going to hold the range once more to move down or break out? One thing I do know is I'm not going to buy there because it's clear resistance, okay? That's the one thing I do know I'm not doing. However, you know, being a buyer, should have been buying as we started to once more pop back above 87.33, which is a monthly top over here, and 87.30 here, which is the weekly top. All right, that was the area to watch. Once we pop back above there, we were going back up. Now the question will be, because if we move to the 4 hour chart, just trying to get rid of that box colored bit, is, you know, we could top out. You can watch as we're moving up, you'll see we're at the 79% level overlapping with the resistance. Now, normally I would be engaging here, looking at this to be moving up and failing at monthly resistance, and then it sells off, rallies, sells off. However, there's this very strong underlying bid with the potential of the carry trade kind of scenario going across all these yen pairs at the moment. So I think you need to see a little bit more information here that this starts to turn over, because this could just continue up and through. So I'd like to, maybe this to start to, there's a bit of a intraday low here. So seeing price action come down and break that low, then you'll probably get, a smaller time frame rally. So if you drop that down to the 15-minute chart, if you want to get short and you want more confirmation, that's the low I'm talking about. You'd want to see price action hold here, drop below this low. Then you could then monitor that range and look for this to come back up and then sell the rally. All right, so it holds, drops, rallies, and then you look to sell, because the very strong underlying bid. All right, of course you might just go, I want to sell there, and you can sell there. So normally in a normal world I would be selling there, stop above the high, thinking that from a monthly chart perspective we're holding at resistance, but there's just a very strong underlying bid at the moment, so I'm being a little bit cautious. All right, so you can work out whether you want to get to the short side there or not. You can see we're testing that top once more. Now, by the end of the day, get rid of that fib. By the end of the day, if we have a very negative candle, then you can obviously look then to tomorrow for an opportunity to sell with whatever setup that you want to trade. If the candle of today clearly shows that we're holding, we get a nice negative rejection candle up here by the end of the day, things could be different. Negative spinning top there last time. If we get a negative spinning top or something there, then it may look more appealing to be a short there. All right, New Zealand dollar, putting in a higher bottom here, getting back above 62.03. So I think this is holding its uptrend and it wants to move up at the moment. The line for the buyers and sellers is that 62.03 level. So similar sort of thing with, back to the day chart, I have been discussing the fact that on the weekly chart, that's moved to a lower bottom. This could be where we're forming a lower top, because we're at 62% level. We're also at 79% level. So I'm in two minds about which way this is going to move at the moment. Overlapping fibs here. This could be a weekly lower top forming, but at the moment the day chart's holding up. So because it's another higher top, another higher bottom forming, we could be moving up beyond this top here. So this is one of the weaker pairs to the US dollar. It hasn't moved to new highs since last week. And it hasn't, like the pound dollar's moved to a fresh high for the month from last month. We're not doing that either on the New Zealand dollar. So there is the potential that we've moved down from that high. We might come up to the 79% level and form some form of, like I was just saying, the potential for a reverse on the New Zealand yen, there could be the potential of head and shoulder forming in this area. And that could be the final top for a weekly lower top. But the day chart trend is holding its uptrend, but these swings could, you could watch for price to come up to test that left shoulder, the 79% level, run about there. This starts to turn over the next 12 to 18 hours, then you could be looking for this to move down. But day chart trend is up. So this whole filling of the imbalance here, this is where we had the last interest rate decision, and then it just collapsed. So we're holding below that area. So this is a significant area to the market from the last interest rate decision. That's why, we're not taking out that area with any conviction. And you can see that price action, where it is today, hasn't got there. All right, so that's a clear marker for that, for this pair at the moment, is the start of that drop after the interest rate decision. As he's saying, well, right now where I'm talking is resistance for the New Zealand dollar. If it doesn't want to, you know, that's where it could potentially fail. 79% level, 62.22, and that imbalance area that was, which has been filled. That most definitely is where price could definitely fail at. So, of course, that day chart trend is up. And, you know, over the next 24 hours, we could just continue up. But I think if you're long, you need to be cognizant of this area here, which is about 120, so which is 62.32, 79% fibs at 62.22. You know, the daily resistance level that we're moving back above here at the moment is 62.03. So if it can't start to hold above 62.03, it's in danger of reversing. So that's the line in the sand. At the moment, it's holding above 62.03. But if it starts to not want to hold above 62.03, that's the worrisome level for the buyers. All right. Okay, dollar CAD. Now on Tuesday, it's always good to review what I said on Tuesday. I said watch 132.62, which is your monthly. Well, you can't see it there, but I'm going to have to take the fib off so you can see it. The monthly low here that we broke below last week became resistance this week, 132.62. That low just there. I said watch that on Tuesday. Tuesday pretty much came up a few pips above, put it and then held, and we put in a lower top. So your best opportunity to get short has been missed for the week. To your 4-hour chart at the moment, we're in a clear downtrend. You know, you need to monitor the 4-hour range, look for a rally. 62 level lines up with 132.08. 132.08 is that daily old support level over here now being resistance. So we've moved below 62.08. So now look for 62.08 to be resistance on a move back up. And that overlaps with your 62 level on the 4-hour pullback. So don't sell the bottom of the move, look to sell a rally. All right, so waiting for a rally there if it can come around. Of course, it's always the fear of missing out. You're waiting for your rally and price gets moving down. But this is overextended to the downside. I never chase price. I'm always waiting for the pullback. All right. Dollar franc is going to look similar. Now, dollar franc's in a difficult area. I'm going to have to take a few lines off here. I just need to cross-reference what the level is. 89.26 is monthly support. Get rid of a few lines at the moment. All right, so we're coming down to monthly support, which has been offering support over the last 2 months over here. So it's a very dangerous level to be selling, selling into. Of course, we can move through. The weekly trend is clearly down here. Further lower top formed, but it is, of course, holding down here at the moment. So that's weekly support, 88.71. That's your daily resistance. I said that on Tuesday. I said watch 90.02 to move back up to. We went up to 90 and 7 fractional pips. All right, it's pretty much the figure held. So let's just move to the 4-hour chart. 4-hour trend is down here. We're just bouncing on support. This wouldn't be the best pair for me to trade at the moment because this support could hold and change the trend to back to up. You know, this could bottom here to move all the way back up. But in terms of trading the trend at the moment, the 4-hour trend is down. There's your range. I would look up to the high end of the range, the 79% level, 89.77, and watch to see what happens up there. All right. I'd monitor that area on your 15-minute chart, and you see it turn over to move back down. There is an imbalance area starting from there. I'm just joining a few imbalances up, but there's an area imbalance in that area there. Top of it overlaps with the 79% level. So up in that area would be a good area to watch for price to start to hold and move back down with the trend. Okay. Another good area, if it really drives up, would obviously be at the 90 level, the 90.02 level. It's clear resistance at the moment from the day chart perspective up there. All right, dollar yen, day chart. And that 62 level is across that range that we dropped down, which we're not able to move above at the moment. But just in terms of the day chart trend here, it's in an uptrend. And two strong levels here, 141.53 and 142.17. If you go to your monthly chart, I'm getting those levels from these monthly tops over here, monthly swing tops. We're just confined by those two highs over there. So it's just in a difficult area at the moment. Now, the monthly trend is up and the weekly trend is up. A bit overextended on the weekly structure though. And not doing too much on the daily. It's just holding now above the monthly level, holding below, the monthly level of potential support because it's above it, 141.53, and it's holding below 142.17. 24-hour chart. Yeah, in my mind, to trade this pair at the moment, because this could go either way, because it's stuck in this monthly, but in between those two monthly tops, I will just wait for a clear break above. The trend is up, wait for a clear break above, and then look for a pullback. At the moment, it's very consolidatory. So look for a better pair, I think, would be the go, because that 4-hour chart here is just very consolidatory. All right. It's actually in the middle of, it's almost in the middle of those two levels I'm discussing. So I'm not that enthralled by that pair at the moment. Gold, it's most definitely keep going down. Edwin, you're just talking to me about the dollar yen. Let's just go back to it. So you're saying you're looking for a possible head and shoulder pattern. So you're looking for a trend line break, what, on the 4-hour chart? You're looking for a break below there. And the potential of that maybe being a left shoulder and a head. I mean, it could be, but for me personally, there's this whole, all right, you're looking on the 15-minute charts. The whole nature of the dollar yen, which is in a strong uptrend in general terms, is the carry trade and the interest rate differential. So when it could move to the downside, so you're looking to the 15-minute chart. So are you looking for that as a left shoulder up here? I mean, this could be a left shoulder. Yeah, I'd have to see price come all the way back up here first to 142.17 and then see a trend line break potentially. All right. But it would be going against the most dominant trend that we're seeing on the chart from the day chart perspective. So you can monitor that. All right, gold, the weekly level, 1959, looks like it's had its day. We're coming down to the next level, 1920, which you need to go to the monthly chart because it's this significant historical high over here. All right. And there's a top just there at 1916. All right. So it might be more referencing that top because it has touched it. So I'm going to change that to 1916. It's the same level in any event, same area. Let's just put the exact number in. So it looks nice. Move down to the next level. All right. This triple top up here is becoming more and more possible. Your day trend has been very choppy. Maybe be nice if it just breaks. It's still a little bit range bound, but it is lower top, lower bottom. Still the key level to watch for sellers would be another move back up to 1959. All right. You don't want to be selling into support, and that support could most definitely hold. So now it's trapped between 1959 and 1917. So, looking to the 4-hour chart, the day chart top is up here. He's looking for a rally up into the 6279 area. Up to the 79 area is very close to that resistance level. That would be ideal. Back up to this area would be ideal to sell. All right, so that's gold. Now, Azu, you want me to look at the Nasdaq? To the monthly uptrends. I mean, a significant lower top could form at 15,410 if it really wanted to, but from a pure trend perspective, it's now moving up to a higher top. That line's no longer relevant. On the weekly chart, it is at a weekly top. 15,264. I mean, a double top could form there if you really wanted to. Day chart's still in an uptrend. Now, if we came back up to hit 15,264 again, and then we see a trend structure change on the day chart, of course, then we could be dealing with a weekly double top. But at the moment, this is still in an uptrend. And all this might do is just pull back within the fib range to, say, the 62 level, and this top here at 14,673 for a further move up. So there's the question there, are we going to hold at the weekly high and create a double top? I don't think the day chart's showing that at the moment. We need, if we start to see a lower top form or a double top form on the day chart, then that may well be the go after that. So we can monitor that over the next week. But at the moment, it's still structurally in an uptrend. It's just hits, obviously, a level of resistance, and it's having a sell-off. But there's no trend structure change there on the daily at the moment. So getting short without a trend, some form of a hint of a trend change there on the daily, may be a battle against trends. Okay. And so I'd just say, can I look at the franc yen? All right, it's in a clear uptrend. I don't know whether this is the all-time high because I don't have enough data going back. It may well not be the all-time high, but it's the all-time high that I have. Clear trend, it is overextended like all these yen pairs, but in a clear trend on the monthly and the weekly. And going to a new high today on the daily. Like I was saying on the Euro yen, I'll be looking to the 4-hour chart. If you want to get long and still trade this overextended move, I would look to the 4-hour fib range and look to the 62.79% retracement. Look for a dip and then a move back up after the dip. All right, clear uptrends. I'd be very cautious across all these yen pairs at the moment about selling. Yen's very weak. Dollar yen's very sideways, but underlying definite trend there to the upside on the dollar yen. There is a question, of course, the dollar index is moving down. So the dollar yen could be getting in a battle of the dollar weakening, but nobody really wants to hold the yen because of the carry trade. So it could just go sideways. All right. So we may well see the dollar yen go in some kind of sideways pattern, maybe a slight decline, but there is an underlying carry trade for sure on the dollar yen. That's not going away anytime soon. All right, so that's the franc yen. Thank you. Any more? All right, I think I'm up to date with all the questions. All right, let's just have a look back at the euro dollar. So it's trying at the moment to get above 110. As I say, I can't entertain buying up here. I need to see a dip. And one of the questions on this euro dollar would be where we clearly failed at 110.33 last month. We could fail once more there. The whole range of last month is here. And we actually load on the last day of the month. So all this pullback is very annoying if you were short, like I was. I'm not short anymore. And 109.93 is a 79% fib as well. So the market could actually go, the day trend is clearly up. You'd be very courageous to short this unless the day trend changes. But we could, over the next week, between the 79% level there at 109.93 and 110.33, see this pair top out. There is that possibility, but most pairs, especially the pound dollar, is very strong to the US dollar. We didn't feel an imbalance to the upside as well that we formed. We go to the 4-hour chart. This imbalance here, all this sideways price action through late Friday, Monday, Tuesday, could not come down to fill an imbalance. So this is just telling you that the buyers are coming in and wanting to hold it up. That's the remainder of the imbalance at the moment. Didn't want to fill the complete imbalance. In fact, there's a couple of imbalances. If we join both imbalances together, there's all that area there. So there is the question that we could top out up here at 110.33 to come down to fill this imbalance as we move back down to the downside, if that's what price wants to do. But at the moment, there is a definite underlying bid to the euro dollar. And with that underlying bid at the moment, I think the more prudent approach is, the day chart's up quite clearly, the 4-hour chart's up quite clearly, and I will be monitoring a dip on the 4-hour chart at the moment. Now, if the 4-hour trend structure clearly changed, let's say we just fail at 110, and the 4-hour structure then clearly changes, all right, then yes, we could be topping out up there, but at the moment we don't have that information. What's my thought on the VIX slab? It keeps going lower. Well, we're heading towards the summer period in the UK and America. Often August can be quite a range-bound time of the year. So if the VIX is falling, it just means that volatility is potentially dropping out in the market. All right. And maybe the risk in the market is falling, is not perceived as much. So that's all. I don't really look at the VIX too much, but obviously you're telling me that it's going low at the moment. I think usually when I see commentary about the VIX, when it gets very extreme, that's potentially when stock markets may be at extremes for crashing, that sort of thing. So if it's very low at the moment, thinking about the fact that we might get a stock market crash, if anybody's thinking about that, clearly the stock markets are moving up at the moment, showing very bullish nature. I was talking to Nathan about this the other day. If the stock markets are clearly bullish and wanting to move up, potentially they're thinking maybe that the Fed is at their highest interest rate and that rates may be coming down, even though they've kind of hinted at a further 2 rate rises. They haven't said when, and data may predict that they don't, depending on what the data comes out. So yeah, all really the VIX does is just say that the volatility is reducing. is that reducing the volatility to the upside or the downside. All right. All right, so it is worth watching. You know, I'm not entertaining buying the euro dollar up at 110. Structurally, it's still in an uptrend. You know, from a trader's perspective, look to buy a dip. However, if the structure does change, maybe over the next week, as we're talking next Tuesday and Thursday, looking at the analysis, if we start to top out at 110, let's say 2 or 3 times we try to move above 110 and we can't, well, then maybe we are looking at 110 for a short. But at the moment, I think you're just shorting the top of the move at the moment. You know, today's price action can't get to the central pivot point. So this is very well bid around about 109.80 at the moment. All right. And as I'm talking, it's just trying to shift above 110. So at the moment, it's in an uptrend. Look to buy a dip. But things, as you know, at the moment, things can change very quickly. So I'm just not wanting to short unless I see a clear signal. All right, so being patient. I don't have the fear of missing out. I'm not going to buy at top of a move. I need to buy a dip as well. All right. Any final questions? Coming up next week on the webinar front from myself. More analysis next Tuesday. I'm going through Fibonacci, the price roadmap, trend continuation pattern on the 28th. More analysis on, that's Wednesday the 28th, and then Thursday the 29th, more analysis, okay? All right, so we're definitely, you know, almost at the end of the month, and pairs to the US dollar are obviously moving up. So we had a very negative month in May. I was expecting a month down falling, and we never followed through. It's always annoying when we low on the last day of the month, and then we turn around and trade up for the rest of the new month. That is just so annoying. But anyway, the market is always right. We can only trade what the market presents, and we may well finish at the, you know, on the euro dollar, we traded down and closed on the last day of the month, lowing on the last day of the month. We might trade up all the way up to the high of the month this month, and then swing all the way back down the following month if the market wants to trade range bound. Why you want me to show you gold? So the level on what we'll be watching would be the 79% level. That's across the daily range here. 79% level. That's at 1957 up to the weekly resistance level at 1959. That would be the most opportune level to look for a short if it could offer that nice rally back up. That's where we've been failing for the last month. All right. All right, everybody, thanks very much. Thank you, Wade. Have a great rest of the week. Have a great weekend. And if you have the time, we'll look forward to seeing you next week. Thanks, everybody.